Every morning, the countdown begins for the markets with meticulous research and analysis designed to help you capitalize on the trading day. Beaming live from the CNBC-TV18 Motilal Oswal studio.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. We are coming to you live from the CNBC-TV18 Motilal Oswal studios. It's a very, very rainy, wet Mumbai morning, Tuesday morning. And we will get you weather updates as well. Actually, it's been coming down in sheets. Absolutely. Lots to track here in terms of overnight developments and whether there is follow-through after yesterday's great lift that the markets got on the back of all that happened over the prior three trading sessions. I'm Prashant. With me, my colleagues, Surabhi and Nigel. Guys, good morning.
Hi, good morning, folks. It's just grey all across, right? The sky, the sea, the land, it's just a big white slate of grey. So, keep safe out there. Don't venture out unless you really need to for the next couple of hours. The Met has been saying that next, I think, couple of hours, rainfall is expected to be heavy, but we'll get you more updates. There was some waterlogging last night. Let's see. Schools and colleges, of course, shut today in and around Mumbai. That's the city, and we'll get you more. But, guys, it's all about the suit. And it seems this suit is working. I don't know if anything else worked in the diplomacy between all those men out there in the White House, but the suit definitely seems to be working.
Indeed, always an interesting piece, right, coming in from on the global front. But just with regard to the Mumbai rains, I think stay safe, guys, out there. This is not the day to go to Lanabla for a drive. This is not the day to venture out or do those reels. Please, please, stay safe. That's important. You're being given a holiday for a reason. Stay indoors.
What holiday? Schools, huh?
Schools, schools.
All right, let's take it from the top then, right, in terms of what you need to know as we begin this session. So President Trump, the meeting, the eyes were on that meeting, right? President Trump called Russian President Putin after meeting with Ukrainian President Zelensky and EU leaders as well. I think that's the key takeaway. And apparently that call happened while, all those guys were still in the White House meeting with him. He sort of called Putin in between meeting with his sort of counterparts from EU and Ukraine, etc. I'll tell you why we know that. Trump said he's actively working to arrange a summit between Putin and Zelensky. So he said, well, he may be there as well. So like a trilateral meeting. Remember, this is significant because so far Zelensky, egged on by Trump, has offered to meet Putin. Putin has refused so far. He's basically offered up as foreign minister and other officials, but he himself in person has refused to meet unless some of his conditions are met. Trump said a direct meeting could provide a reasonable chance of ending the war. So that is, something which, of course, he believes is possible. And the reason we know that, this call to Putin happened is because NATO's Secretary General, Mark Rutte is somebody who's very close to Putin, is sometimes referred to as the Trump whisperer. He confirmed that Putin has agreed in principle to a meeting with Zelensky. We've not heard anything from the Kremlin, from Russia, from Putin, or any of from the Russian side, basically. But the NATO Secretary General said that looks like Putin has agreed in principle for that meeting between Zelensky, Putin, and maybe Trump there as well. So I think this is not the end of the story. This will go on, if you wanted to put probabilities to it, perhaps still a toss of a coin, we'll see. But this is at least moving now in direction which we've not seen for the last 3.5 years that the war has raged on. In terms of price action last night, nothing very much. US equities flat, S&P was almost unchanged. Dollar index was up about 0.3%, 98. Oil, $66.5 per barrel. Markets in the US and actually around the world will also wait for Fed Chair Powell's speech later this week at Jackson Hole. I think that's going to be important. Yesterday, Prime Minister Modi chaired a meeting with ministers here in India, and this comes on the heel of the announcement on GST, the promise on GST, etc., which he made from the Red Fort on the 15th of August. He chaired a meeting with ministers, secretaries, economists to discuss next generation reforms. And the reason this is important is because this is the first meeting that the Cabinet Committee on Economic Affairs held with the Niti Aayog, with economists and other involved parties. This is the first meeting in about 5 years. that has taken place. And this kind of then shows the intent that perhaps what has been a promise as far as GST is one, but maybe there is more coming. At least the government wants to do it and move in that direction in terms of intent. I'll just circle and tie in the levels. The big question is whether there is more left after yesterday's big move. The Nifty yesterday managed to end above the 20-day moving average. It has also retraced 50% of this entire fall from the highs that we've seen. So support for the market comes in at the 20-day moving average, the first one, 24,753, and then the lower end of the gap. That is basically the gap between Thursday's close and yesterday's gap up. The lower end of that gap is 24,673. Resistance comes in, 50% is done. 61.8% is 25,160. For the Nifty Bank, the resistance comes in at the 40-day exponential moving average, 55,938. And then the second resistance is the 50% retracement, which is 56,267. Support is the lower end of that gap area, which is nothing but the high on Thursday. 55,472 is that sort of level on the downside as far as the Nifty Bank is concerned. GIFT Nifty will give you a sense. I was saying this yesterday. I think the bulk of the GST-led move is done unless and until what we hear from the group of ministers in terms of proposals, etc., is really big. So I think more normalized kind of market after that big gap up and the decent 250-odd point higher close that we saw on the Nifty. But what are the F&O cues? Nigel is across on the wall with exactly that. Nigel, over to you.
Well, yesterday was a good trading session. We had a couple of booster shots, and that's why we had a good session. Though you can quibble a little bit that the last hour trading action wasn't very encouraging because there was some profit taking on Nifty as well as on individual stocks. But the reason we ended high yesterday was two big reasons. One is the institutional buy number. So both the institutions, they were on the buy side. That was encouraging. Point number one. Point number two is there was a bout of short covering that did take place in yesterday's trading session. So both the Nifty as well as the Nifty Bank. The Nifty Bank, which has been a relative underperformer, there was a bigger short covering bounce that played out here because that index ended high with a gain of around 450 points or thereabouts. And you had the open interest that was down. And that perfectly ties in with what the FIs did because they covered short. Some short covering is what we saw on index futures. Even on stock futures, there was some covering that we saw and there was some long addition. So in yesterday's trading session, there was institutional buying and there was short covering, which in turn pushed the markets higher. Moving to how are they positioned right now? Well, they're pretty much still very, very net short on the index. So the net short positions continue to remain at close to around 1.7 lakh contracts. In percentage terms, it's at around 9%. So some part, it was just some kind of glimpse of short covering that we saw yesterday. There could be more in store if we get more positive news flow that comes in. Moving to the options data, then the 25,000 call, well, that was very active in yesterday's trading session. The premium at around 80 rupees. At one point of time, it was more than 100 rupees. There was writing that we're seeing at this particular level. On the downside, though, the 24,800 put, 24,700 put, there was writing even at those strikes. So just for the day, if you're looking at levels, that you're going to be looking to work with, the 20 DMA, that got crossed on the Nifty in yesterday's trading session. That becomes a bit of a support zone, and that's a support range you're looking at. Going by the options data, going by the technical levels as well. Yesterday, we rejected the 25,050 odd mark, 25,050 to 25,100. So that's the broad range you're looking at. The Nifty Bank, it showed signs that it wants to come back to life yesterday. Unfortunately, it ended off the top. And that's the resistance zone you're working with. The 20 DMA around that 56,000 odd mark, and yesterday's high around that 56,200. Crucial resistance zone for the Nifty Bank. Finally, stocks that we're looking at, we told you in the last 30 minutes itself. PNB Housing Finance, possible stock that comes out of the F&O ban. That's precisely what's happened. You're looking at now who's going to be the new man in charge on PNB Housing Finance. The new CEO announcement is something that you're going to be eyeing. And in terms of valuations, it trades at around 0.95 times price to book. So that's the stock that I'll keep on my radar for today's trading session. Back to you guys.
Okay, all right. So we'll watch out for all of that. By the way, Prashant, you'd know this. I don't know about Nigel, but all the meetings that were happening yesterday and the fact that the conclusion is that they'll continue to meet reminded me of the Jaspal Bhatti episode. I'm sure you know which one I'm talking about. Meeting ke baad kya hua? Well, we decided ugly meeting ki date. So essentially, that's how the global...
legendary show.
Legendary, yeah. So that's how the global diplomacy theatre is playing out. Very quickly, Asian markets. And yeah, that flash on the screen is really interesting. That's the biggest news across Asia this morning. SoftBank is investing $2 billion in Intel. It's picking up about 2% stake. Markets are a little concerned. SoftBank shares are down 5% on the back of that. It's a big global news development. Overall markets in Asia, range-bound. The bias is slightly negative, and the implied open is suggesting that we'll also start quiet, maybe 4-5 points on the lower side. Okay, so with that, let's quickly move on and get to the equity call of the morning. Rhythm Desai of Morgan Stanley says earnings for the broad market were in line with narrow indices. Likely improvement in growth coupled with recent developments provide triggers for indices to make new highs sooner rather than later. They are overweight on a host of stocks including L&T, Adani Ports, JSW Energy, Eternal, Memphis, Coforge, Kotak Mahindra Bank, among others. And they're underweight on the likes of Concor, Tata Elxsi, Tech Mahindra, Federal Bank, L&T Finance, Cipla, Hero Moto, and Amara Raja, along with Metropolis. So some stock-specific calls coming in from Morgan Stanley this morning. Let's take it forward then. Our first guest on the show this morning is Robert Subramaniam, Head of Global Macro Research at Nomura. He's joining us from Singapore. Robert, great to have you with us. Thanks so much for joining in. So like I said, we don't know which way all of these meetings are going. Eventually, hopefully, there's a breakthrough, especially for us from India. So let's work with what we have right now. What we have is come the 27th of August, we're looking at 50% tariff on all our US exports. How do you look at India amidst all of this? And do you think it could have a meaningful repercussion on the economy and the outlook here?
I mean, if the 25% so-called penalty tariff goes into effect on 27 August, as you say, yeah, that would have a very big impact. I think it is. We have to appreciate as tariff rates go higher and higher, the impact on the economy is likely non-linear. You might remember when China and the US had their tariff trade war and tariffs went over 100%, it got to the point where it was almost like a sudden stop in trade. So the impact gets increasingly bad the higher the tariff rate goes to where it's just not economical to trade. So, we'll have to see. This may not go through. It depends, I think, partly on what happens with the Russia, Ukraine, US, EU talks that are ongoing now. If that comes out to be a good outcome, maybe the financial sanctions and so forth on Russia will come off. The other thing I would say, though, is India, I think, is doing a very good job on looking at policies to kind of offset the tariff impact. So domestic policies, whether it's encouraging the public to buy India products, whether it's the VAT rationalization or ease of doing business, I think there's a lot in the works that will help counter at least the 25% tariff. I think it would be harder to fully counter, as I said, if we get the tariff rate going up to 50%.
Right. How do you model the, let's say, assume 27th is not far, 50% goes into effect, Rob. Morning, Prashant here. How do you model for that?
Prashant.
You say, let me change some numbers, and how will investors look at it? I mean, obviously it can't be permanent, right? I mean, it's not, it's not negotiated down before 27th, it will be, perhaps takes more time.
Yeah, I mean, it's not easy to model, to be very honest with you, Prashant. I mean, the reality is, if you're looking at the details, it's not completely 50%. There's a lot of exclusions that are involved as well. And as I said, the impact starts to be non-linear as tariffs go higher and higher in terms of, is it economical to make those exports? So, we're at the moment, we have not modeled into our forecasts an additional 25% yet. And I think that's probably the case for a lot of economists and market participants. I think it's kind of waiting and watching to see what happens. And I think my sense, speaking to investors overseas, not so much in India, is that if that penalty 25% tariff does go into effect on 27 August, I think that is not fully anticipated. And so you will see a negative response to that.
Hi, Rob. Good morning. Good to see you in. Nigel on this side. In times of uncertainty, you look inward. And what kind of measures can the government do, or the regulator or the RBI do, to help the domestic economy? That said, the RBI, the monetary stimulus has been quite good. They have eased rates considerably. Do you think there's more in store? There's an outside chance maybe we see another cut in December? Or do you think the RBI is done with what they had to do for 2025?
That's a great question. I would say, the S&P upgrade that India was awarded was very well deserved. And it's a reflection of, I think, years of prudent monetary and fiscal policy that India has achieved. And that puts India in a good position. In a way, it's saved for a rainy day to be able to ease policies in response to this external headwind of tariffs. And we've seen it, and we think there's more to come. So, on the RBI, we do think inflation has come down nicely, and we think that there will be 2 more rate cuts before the end of the year in October and December. And then on the fiscal side, this VAT rationalization, we don't think it's actually going to add that much to the budget deficit. We think it's going to be cleverly crafted where low cost products are going to have moved down in the rungs of VAT rates, but expensive products, luxury items are going to go up. So the net effect in terms of revenue raising won't be such a big hit. We think it may only add maybe 0.1% of GDP to the budget deficit. Maybe it could be even revenue neutral. We'll see. But we do think it will help support consumption, especially lower income households. And we think it's going to be disinflationary, so provide more support for the RBI to cut rates. So overall, we're getting more optimistic on the monetary and fiscal outlook. We think it will provide decent support to what we think is going to be a slowdown in exports.
Well, the policymakers here will really appreciate that view, Robert, because you seem to be saying that it's going to work like magic without causing any excessive damage. 0.1% increase in deficit, not much perhaps. You mentioned that if this additional 25% tariff were to come in on the 27th, it will have an impact. You meant from a market standpoint that it could, provide another leg down maybe for equities over here. You're saying it's not technically in the price.
That's right. It's hard to fully judge, but my sense speaking to investors is they're still not fully convinced it's going to go through, particularly with the stepping up in negotiations between Russia and Ukraine happening now. The probability, the likelihood that maybe there is a good deal and that this 25% tariff will not go in effect. There is a window for that. So, investors are open to that possibility. And I think as a result, are not fully pricing that this will go through. So if it does go through, I think it will be a negative for India.
Right. Rob, of course, fingers crossed, we'll see what happens, but would love to have you back after the 27th, one way or the other, right? There will be
love to be back.
Stuff to talk about. Thank you very much for joining us here today. Let me just quickly run you through what's lined up here on the program. So 8:35, Ashok Leyland management will be speaking with us on the first quarter numbers. Stock was up very sharply. Numbers came through on last Thursday. 9 o'clock, we'll have Gaurav Malhotra of Axis Capital. Is there a implicit tariff increase which has happened for the industry? We'll tell you why and the implications there. Rajiv Batra of JP Morgan at 9:20 is a market master of the day. 9:30, you'll hear from the manager of JK Cements, talk about demand trends, GST reforms. Rajagopal Sastry of Endurance Technologies will be speaking with us at 9:40 to talk about the quarter gone by. 9:50, Yanesh Chaudhary of Vikram Solar as their 2,100 crore, near 2,100 crore IPO opens today. It's the economy with Lata in conversation with Samiran Chakrabarti of Citi and Soumyakanti Ghosh of State Bank of India. That's coming up at 10:15. All right, time for a break. We are back on the other side. Top stocks to watch for the day with our research team.
Welcome back. Lots of stocks on our radar as well. Overall cues, as we've been telling you, across Asia are thin. US futures are flat right now. And it's all eyes on the eventual outcome of all of those meetings that were going on in the White House till late hours. That's the implied open, just about 8 points lower. Plenty of stocks on the radar. As always, we have Sudarshan joining in with the most interesting ones. Good morning, Sud.
Morning, Surbhi. So earnings season is over, so I have taken stocks in news as part of SIN for today's trade. So first one in that list is Vedanta, which is going to consider second interim dividend for FY26, and that board meets on August of 21, and record date for interim dividend will be August 27. Earlier to this, company had announced first interim dividend of rupees 7 per share on June 18. That was worth rupees 2,737 crore. Next is Vodafone Idea. After earnings, company had held earnings call yesterday in which it has commented about funding as well as AGR dues. Company is saying that it has been in engagement with government related to AGR dues, and it has requested government to complete the resolve AGR issue before March of 2026. Regarding funding, company say it has been in engagement with banks, but it's also looking at other sources of funding, and that funding amount can be less than rupees 25,000 crore that company had earlier announced. Next is Hindustan Zinc. Company is going to set up 10 MTPA tailings reprocessing plant at Bhilwara in Rajasthan. That will be done with an investment of more than rupees 3,800 crore. And this is part of company's plan to increase, double its production capacity. GMR Airports, company's board will meet on August 21 to consider fundraising of more than rupees 5,000 crore. And that can be done in one or more tranches via QIP or other means. Keep an eye on all these cotton importers like Indocount, Vardhman Textiles and other companies, because government has announced that it has temporarily exempt cotton imports from customs duty. Basically, it has removed 11% customs duty till September 30th. Last one is Lodha Developers. Rajendra Lodha has resigned as director of the company effective August 17. But the important part is company is saying that certain matters related to Rajendra Lodha to his conduct are under review by company's ethics committee. That's the reason stock will be in focus.
Okay, all right. Thanks a lot for that, Sudarshan, for giving us that list of stocks. Well, Reema joining in to tell us about Reliance Jio, because it's indirectly hiked tariffs by around 20%. Reema?
Indeed. So what Jio has done is discontinued its entry-level plan, thereby effectively raising the tariffs. So earlier, the entry-level plan was 209 rupees for 22 days or 249 for 28 days. For the sake of simplicity, let's take the 249 rupee plan. Okay, now that 249 plan for 28 days has now become 299 rupees for 28 days, effectively increasing the price by 20%. Now it's at par with the rest of the industry. Even Bharti and Vodafone Idea's entry-level plan for prepaid users is at 299 rupees. Now, Jio, though, continues to offer more value. Their 299 plan, the new one, gives you 1.5 GB of data per day, while players like Bharti and Vodafone Idea offer you 1 GB per day. So the chance of down trading, which basically means that I'm okay with less data, I will go to a lower price plan, that does not exist. Now, what is the impact? IFL says that 249 is not that popular, so according to them, the impact on Jio's revenues, mobile revenues, could be less than 2%. Axis believes the impact could be 4 to 5%. But the big question is, will Bharti and Vodafone Idea follow suit with a tariff increase? Back to you.
By the way, Reema, another subscription plan which I heard was ChatGPT's plan, right? Did you see that? ChatGPT Go in India at 399 rupees. I don't know if Reema's there.
Oh, sorry, I missed that news. I was away this weekend.
No, welcome back. I mean, so that's the other one, right? 300 and... I mean, I'll have to see what this is about. $300 per month. I think it was $20, right? ChatGPT globally, the plan was. Have they changed it? I'm not really sure. But that's the other big one, which consumes a lot of data. My point was, I mean, it consumes a lot more data. I mean, all these large language models. Yeah. And as adoption there increases, I mean, the demand for data anyway sort of gets a big lift. I mean, that's what we've seen globally. Let's talk about some brokerage views as well, right? Sudarshan is back with us, and we've got views on Reliance and JSW Infra. So, good morning.
Morning, Prashant. So besides tariff hike that Reema has talked about, there is another positive trigger for Reliance Industries, and the Citi has come out with a note. First, it has maintained buy call and targeted 1690 per share. Citi's note is based on SEBI's proposal related to large IPOs. So Citi is saying that SEBI has proposed to modify minimum public offer requirements for large IPOs, and key proposal that SEBI has talked about can have meaningful positive implications for Jio's potential IPO that Citi believes. It says, SEBI's proposal says, for issuers with a post-IPO market cap of more than ₹5 lakh crore, for which minimum public offer size will be reduced. So, and it would be reduced to 2.5% from 5%. So, why it is positive? So, as per Citi, a 5% offer will be $6 billion plus of share supply. That will be fairly large for market to absorb. But if it's reduced to 2.5%, that offer will be of $3 billion plus, which can reduce a supply overhang, and basically it would be positive for Jio's IPO whenever the company comes out with. Another brokerage note is on JSW Infra that Jefferies has written. It has a buy call and target is 375 per share. It has mentioned 3 catalysts. First one is 31% capacity addition via commissioning of underdevelopment ports or terminals. Second is potential project wins with an uptick of public-private partnership project awards for government-owned major ports. Also, capacity increase that company is planning to increase to 400 million ton by FY30. As per Jefferies, it's intact. And apart from this, logistics, Jefferies believes, is another sweetener for JSW Infra. That's the reason it's positive on the stock.
Okay, all right. Got it, Sudarshan. Thanks very much for that. So a lot of broker notes, and we'll keep them on our radar as well. Let's do a quick roundup of all the commodity market action. We have Manisha joining in with the latest. Manisha, good morning.
Morning, Silvi. Thank you for that. I'll start with the crude oil prices, and after, even as we are down 9 to 10% for the month of August, but the crude oil prices overnight saw a percentage point of gains. I mean, there's just so much to watch out for when it comes to the international market. After the U.S. and Russia presidents meeting, it has been U.S. and Ukraine and European leaders meeting as well, and there are various kind of statements coming in right now. Well, to begin with, there is an expectation now that U.S., Russia and Ukraine, a trilateral meeting could be happening, and we would see a result out of that. Having said that, the markets already believe that if there is actually a resolve here, then you could be looking at the crude oil prices going sub 60, because the Chinese data has been on the weaker side. OPEC Plus has been increasing production. So there's less reason for the crude oil prices to increase unless you see more sanctions on Russia and secondary sanctions on buyers continue. So it still is a wait and watch when it comes to the crude prices. Having said that, the weak China data clearly has had an impact on the metal prices, where you are looking at copper, aluminum, steel, iron ore, all of these prices trading declining on a declining mode for a second straight day. All these markets clearly now are looking out for the Jackson Hole Symposium meeting and the Powell testimony from there. That would give us further direction.
Okay, all right, Manisha, thanks a lot for that. Well, on that note, though, we'll slip into a short break. On the other side, we have Mayuresh Joshi, who's joining in to help us out with some fundamental stock talk.
Welcome back. Well, lots of stocks on our radar as well. Overall cues, as we've been telling you across Asia, are thin. US futures are flat right now. And it's all eyes on the eventual outcome of all of those meetings that were going on in the White House till late hours. That's the implied open, just about 8 points lower. Plenty of stocks on the radar. As always, we have Sudarshan joining in with the most interesting ones. Good morning, Sud.
Morning, Surabhi. So earnings season is over, so I have taken stocks in news as part of SIN for today's trade. So first one in that list is Vedanta, which is going to consider second interim dividend for FY26, and that board meets on August of 21, and record date for interim dividend will be August 27. Earlier to this, company had announced first interim dividend of rupees 7 per share on June 18. That was worth rupees 2,737 crore. Next is Vodafone Idea. After earnings, company had held earnings call yesterday in which it has commented about funding as well as AGR dues. Company is saying that it has been in engagement with government related to AGR dues, and it has requested government to complete the basically resolve AGR issue before March of 2026. Regarding funding, company say it has been in engagement with banks, but it's also looking at other sources of funding, and that funding amount can be less than rupees 25,000 crore that company had earlier announced. Next is Hindustan Zinc. Company is going to set up 10 MTPA tailings reprocessing plant at Bhilwara in Rajasthan. That will be done with an investment of more than rupees 3,800 crore. And this is part of company's plan to increase, basically double its production capacity. GMR Airports company's board will meet on August 21 to consider fundraising of more than rupees 5,000 crore, and that can be done in one or more tranches via QIP or other means. Keep an eye on all these cotton importers like Indocount, Vardhman Textiles and other companies, because government has announced that it has temporarily exempt cotton imports from customs duty. Basically, it has removed 11% customs duty till September 30th. Last one is Lodha Developers. Rajendra Lodha has resigned as director of the company effective August 17. But the important part is company is saying that certain matters related to Rajendra Lodha to his conduct are under review by company's ethics committee. That's the reason stock will be in focus.
Okay, all right. Thanks a lot for that, Sudarshan, for giving us that list of stocks. Well, Rima joining in to tell us about Reliance Jio, because it's indirectly hiked tariffs by around 20%. Rima?
Indeed. So what Jio has done is discontinued its entry-level plan, thereby effectively raising the tariffs. So earlier, the entry-level plan was 209 rupees for 22 days or 249 for 28 days. For the sake of simplicity, let's take the 249 rupee plan. Okay, now that 249 plan for 28 days has now become 299 rupees for 28 days, effectively increasing the price by 20%. Now it's at par with the rest of the industry. Even Bharti and Vodafone Idea's entry-level plan for prepaid users is at 299 rupees. Now Jio, though, continues to offer more value. Their 299 plan, the new one, gives you 1.5 GB of data per day, while peers like Bharti and Vodafone Idea offer you 1 GB per day. So the chance of down trading, which basically means that I'm okay with less data, I will go to a lower price plan, that does not exist. Now, what is the impact? IFL says that 249 is not that popular, so according to them, the impact on Jio's revenues, mobile revenues, could be less than 2%. Axis believes the impact could be 4 to 5%. But the big question is, will Bharti and Vodafone Idea follow suit with a tariff increase? Back to you.
By the way, Rima, another subscription plan which I heard was ChatGPT's plan, right? Did you see that? ChatGPT Go in India at 399 rupees. I don't know if Rima is there.
Oh, sorry, I missed that news. I was away this weekend.
No, welcome back. I mean, so that's the other one, right? 300 and... I mean, I'll have to see what this is about. 300 per month. I think it was $20, right? ChatGPT globally, the plan was. Have they changed it? I'm not really sure. But that's the other big one, which consumes a lot of data. My point was, I mean, it consumes a lot more data. I mean, all these large language models.
Yeah.
And as adoption there increases, I mean, the demand for data anyway sort of gets a big lift. I mean, that's what we've seen globally. Let's talk about some brokerage views as well, right? Sudarshan is back with us, and we've got views on Reliance and JSW Infra. So, good morning.
Morning, Prashant. So besides tariff hike that Rima has talked about, there is another positive trigger for Reliance Industries, and the Citi has come out with a note. First, it has maintained buy call and targeted 1690 per share. Citi's note is based on SEBI's proposal related to large IPOs. So Citi is saying that SEBI has proposed to modify minimum public offer requirements for large IPOs, and key proposal that SEBI has talked about can have meaningful positive implications for Jio's potential IPO that Citi believes. It says, SEBI's proposal says for issuers with a post-IPO market cap of more than ₹5 lakh crore, for which minimum public offer size will be reduced. So, and it would be reduced to 2.5% from 5%. So why it is positive? So as per Citi, a 5% offer will be $6 billion plus of share supply. That will be fairly large for market to absorb. But if it's reduced to 2.5%, that offer will be of $3 billion plus, which can reduce the supply overhang, and basically it would be positive for Jio's IPO whenever the company comes out with. Another brokerage note is on JSW Infra that Jefferies has written. It has a buy call and target is 375 per share. It has mentioned 3 catalysts. First one is 31% capacity addition via commissioning of under-development ports or terminals. Second is potential project wins with an uptick of public-private partnership project awards for government-owned major ports. Also, capacity increase that company is planning to increase to 400 million ton by FY30. As per Jefferies, it's intact. And apart from this, logistics, Jefferies believes, is another sweetener for JSW Infra. That's the reason it's positive on the stock.
Okay, all right. Got it, Sudarshan. Thanks very much for that. So a lot of broker notes, and we'll keep them on our radar as well. Let's do a quick roundup of all the commodity market action. We have Manisha joining in with the latest. Manisha, good morning.
Morning, Silvi. Thank you for that. I'll start with the crude oil prices and after, even as we are down 9 to 10% for the month of August, but the crude oil prices overnight saw a percentage point of gains. I mean, there's just so much to watch out for when it comes to the international markets. After the US and Russia presidents meeting, it has been US and Ukraine and European leaders meeting as well. And there are various kind of statements coming in right now. Well, to begin with, there's an expectation now that US, Russia, and Ukraine, a trilateral meeting could be happening, and we would see a result out of that. Having said that, the markets already believe that if there is actually a resolve here, then you could be looking at the crude oil prices going sub 60 because the Chinese data has been on the weaker side. OPEC Plus has been increasing production. So there's less reason for the crude oil prices to increase unless you see more sanctions on Russia and secondary sanctions on buyers continue. So it still is a wait and watch when it comes to the crude prices. Having said that, the weak China data clearly has had an impact on the metal prices, where you are looking at copper, aluminum, steel, iron ore, all of these prices trading declining on a declining mode for a second straight day. All these markets clearly now are looking out for the Jackson Hole Symposium meeting and the Powell testimony from there. That would give us further direction.
Okay, all right, Manisha, thanks a lot for that. Well, on that note, though, we'll slip into a short break. On the other side, we have Mayuresh Joshi, who's joining in to help us out with some fundamental stock talk. Welcome back. Well, let's take a quick check on the Asian markets. The GIFT Nifty was last suggesting that we're likely to open up with a bit of a downtick, maybe a 50-point downtick. That's something that we were trying to work with. No, around 20-point downtick, so not too bad. And I think Asia was a bit of a mixed bag to kickstart trade. So I think we should get the Asian markets as well up for you. The Hang Seng, if I'm not mistaken, that was trading with some mild green. So a mixed start is what we're seeing on the Asian markets. Hang Seng flat as can be. Taiwanese index down 0.4%. But I think we can hop across to Parikshit, who joined to tell us about China assuring to address three key concerns of their pact with India. Parikshit joins us to tell us more. Parikshit?
Right. We've seen an important meeting that has taken place between External Affairs Minister S. Jaishankar and Chinese Foreign Minister Wang Yi, who is in India. Yesterday, the External Affairs Minister had made a point that both countries must move forward with their bilateral relationship after having seen a difficult period in the relationship. And he had spoken about three key concerns over there. Now, we hear from sources that China has actually promised and assured India that they will be addressing these key concerns. What are them? One, of course, is the rare earth magnet crisis. We have been seeing how China has brought in a licensing system for export of rare earth magnets to all countries. And this has been in place since April. So essentially, we've got no imports of Chinese rare earth magnets since April this year, while other countries are getting it on a case-by-case basis. Then you have fertilizers. We have been seeing how specialty fertilizers is an area where China has been holding back exports to India for many months now. So China has assured India that they will address concerns and ease up supply of these two products. And then tunnel boring machines. We're a big importer of tunnel boring machines from China, and these imports had also been held up. Now, China holds supply chains of certain very critical components where India does not have a manufacturing base, and we are reliant on imports. So this meeting was very, very important for our industry. And in a way, it could lead to a breakthrough and opening up of imports of these three items in the months to come. Let's not forget, he will be meeting NSA Global this afternoon, and later in the evening at 5:30 p.m., Wang Yi calls on the Prime Minister. And all of this is leading up to the SCO meeting in China, where Prime Minister Modi and Xi Jinping will come face to face.
No, absolutely, Parikshit. So fertilizers, rare earth magnets, and tunnel boring machines, right? I mean, those three areas. Parikshit, briefly, what do the Chinese want? Do we know?
China has overall been asking us to ease the regulatory environment for them. Over the last few years, especially since the Galwan clashes, we have seen this demand where China has sought stable relations. They have said that there should not be any kind of economic coercion of their companies. Currently, investments in China are scrutinized by the Indian government. They are not through the automatic route. You have to get an approval from the government. There have been certain criminal cases against Chinese companies as well. So there is this atmosphere of distrust. So China wants all that to be eased up. For example, you've got Press Note 3, which says that all investments have to be approved by the government. So China wants us to do away with all of that and give them a level playing field, just the way they treat other foreign companies from US or Europe for that matter.
Right, access to the market, basically. That's the big one, right? What Parikshit essentially is referring to.
Absolutely. Parikshit, thanks so much for that. I was just mentioning that I guess most might have noticed the Americans are also taking note, right? Mr. Peter Navarro's comment yesterday, first of all, slamming India for continuing to buy Russian oil and financing, quote unquote, the war. And saying now India is closing up to China. So all of this is being watched very, very carefully, very quick shifts in diplomacy. Let's
actually quickly look at the rallying auto stocks as well, right? I mean, the back of likely GST rejig. So our colleague Sudarshan caught up with Shenu Agarwal, Managing Director and CEO at Ashok Leyland, to discuss the impact of GST rationalization on the first quarter performance. Listen to excerpts out of that conversation.
I think if the GST rate cut happens, the CV industry would probably fall into the 18% category, which is a 10% reduction from the current rate of 28%. We really think that this would be a landmark reform in many different ways. First, it's overall going to spur a lot of economy, especially consumption, and therefore it would be better for the CV industry because there would be more freight to carry. And secondly, it will have a direct impact in terms of affordability of the trucks and buses. You know, the prices will go down. Also, we are hearing, other than GST, that there is some action that RBI is contemplating to increase the credit supply and credit access for the automobile sector. I think if these both can happen simultaneously, of course, we have to wait to get a confirmation and more details about this. I think that would be really a boon for the CV industry. As we know that, we have been waiting for a trigger like this because we know that the aging of the fleet is at its all-time high. So maybe this can come as a big trigger for onset of a positive cycle.
So if both these things happen, RBI action that you have talked about and GST rate cut, can we see an increase in the outlook, CV outlook, industry outlook for FY26 that currently you have for the mid-single digit growth outlook that you have for the industry?
I think so. I think it will have an immediate impact, and it will have a substantial impact as well. And therefore, the outlook of the CV industry for this year and the next year should improve from here on if it happens.
Great. Now coming to Q1 earnings. So you have literally outperformed the industry, especially on the volume front. Your profit too has seen an expansion of 13%. Revenue has grown by 2%. I remember when we were chatting after Q4 earnings, you had told me that Q1 might be slightly muted, but you have done better, especially on the margin front. You have done 11.7%, and that is almost 50 basis points expansion that what you have reported overall for FY25. So I know that medium-term guidance for margin that you have is of 15% or a little more than that. What is the margin range that you would be working for this fiscal, or if I can say FY26 and FY27?
Listen, we are very happy with the Q1 results. Of course, this was seemingly a tougher quarter with a lot of pressure from the commodity side. Also, the market last year, as you would recall, Q1 had a growth of about 5% in MHCV. And therefore, we were a little worried about how the market itself would perform. But I think despite all these uncertainties and the geopolitical situations, the commodity situation, I think we have done a good job in Q1. We have been able to raise our EBITDA by 50 basis points. And also simultaneously, we have increased our market share both in MHCV and in LCV segments. So it's a satisfying quarter. Going ahead, our mantra remains the same, that we want to gun for profitable growth. There is nothing like if we can achieve both the increase in market share and profitability, because I think these will, in our case at least, these will come from different levers. But from a market side, the industry side, we are also optimistic because Q2 last year was a very low base, because as you would recall, the CV industry grew by about 14 or 15% last year in Q2. And therefore, in Q2, at least we are operating on a low base. So I think there are good times to come for the industry. And of course, we'll try to do better than the industry.
So what is the current market share for MHCV and LCV? And if you can talk about what was the gain in the market share that you have seen in Q1?
Yeah, so Q1 gain in market share was 1.3% in MHCV. Actually, in the truck segment, we have gained even more, which is to the level of 1.8%. We had a little bit of a market share loss in the buses, but that is not really concerning because we know the specific reasons for that. There has been a sudden shift in the demand of the fully built buses, and therefore, our whole capacity was completely choked as far as buses are concerned. We are ramping up our capacity on the buses in short term and also in the medium and long run. So we will cover that loss in the buses, but we are very happy that in the MHCV truck business, we have gained 1.8% market share. The story is similar in the LCV segment. LCV, we are now reporting 0 to 7.5 ton segment because we have talked in the recent past that we want to focus on the entire LCV segment from 0 to 7.5 ton and no more just 2 to 3.5 ton or 2 to 4 ton. So that change has to come in internally as a measure also. But in overall LCV 0 to 7.5 ton, we have also gained 1.2% market share.
This export business that you continue to do well, even in Q1, you have seen a growth of 29% despite this geopolitical tensions and all these tariff tantrums. How do you see this 29% growth that what kind of growth range that you would be looking for FY26? Do you think that you'll be able to maintain this 29 to 30% range?
Listen, our exports target for the year, for the whole year, is roughly growing it by 20 to 25% in terms of volumes. I think with Q1 growing at 29%, that really helps us in achieving that overall year target. We are not still upping our target. We still want to gun for that 20 to 25% growth for the year. But yes, Q1 was good, and therefore it emboldens our ambition in exports to some extent.
All right. Well, Mayuresh Joshi from MarketSmith India joins in on the show. Hi, Mayuresh. Good morning. Good to see you in. Mayuresh, what do you make of the auto pack? Yesterday you had a big run on a lot of these names. You heard the management of Ashok Leyland. What's the view on this name or Maruti? Both of them were the standout gainers yesterday.
Morning, Nigel. Always a pleasure to be on your show. Two things. One, I think from a sector perspective, I think we remain optimistic on select names. And therefore, names like a TVS Motor, Hyundai, which I've discussed on your show numerous times, is something that we continue holding in our portfolios. Obviously, with the announcements that have been done, the expectation that is largely getting built in now is that there will be some increased activity as far as volumes are concerned. And therefore, I think a stock like Maruti, which probably has a lot more in its product suite, right, from entry-level vehicles to the new vehicles that they are now developing, both in the hybrid and the SUV category, at very attractive price point amidst competition. And let's not forget the sales network, the after-sales network, the spare parts, which are very, very reasonable as well, becomes a huge value addition. So yes, I think that probably becomes something to be watched out for. But in my opinion, again, I think a few auto ancillary stocks might also start doing well. I think they have had some reaction yesterday. You did see some element of action happening within the entire pack. But a stock like Minda, as an example, is something that we've kept on our radar. For the simple reason that a large part of this business comes domestically, 89%, 11% from global operations, again, largely diversified between Europe and North America as well, which probably hedges the risk in terms of higher tariffs. The EBITDA margin performance was reasonable. Because of higher input costs, obviously the margin hit was there on both autos and auto ancillary at the pack. But generally, I think with better orders expected to come through with the European FTA, the UK FTA as well, the expectation largely is that the kind of products that Minda has, right from switches, acoustics, school seats, I think it services a large part of addressable solutions, which is very, very evident in terms of the entire EV transition that they're probably doing. And the content value per kit from ICE to EV, which can be 3 times from 11,000 odd to 35,000 rupees, which can be a huge value addition going forward. That equity is also not too high. And therefore, in my sense, autos selectively should continue doing well. We continue holding Hyundai, TVS Motor, Maruti remains on our watch list, and so does Minda.
Okay, so that's as far as some of these auto stocks are concerned. Mayuresh, hi, good morning, good to have you on the show today. What about consumer durables, ACs, coolers, even the B2B suppliers? All the stocks were rallying yesterday. Would you rush in? Because, otherwise they've been dealing with sluggish demand, untimely rains, and it's been a complete washout Q1 for all of these companies. Would you be a buyer?
Morning, Surabhi. I think the sentimental reaction has come through. Now, the actual numbers, how do they play out in terms of demand trends, is something to be seen as we head into the next few quarters. I think the hope here is that demand should come back quite significantly as we head into the festive season. But my own sense is that whatever we've seen in the past, and this was what we were analyzing over the last few years as well, once the consumption demand starts coming back, I think it's more bottom-up as we see it. So I think it will start from lower-priced items to the higher-priced items as we've seen. In the higher-priced items, with the exception of premium autos, and a select few items which have still not got affected because of slowing urban or semi-urban demand, I think the entire pack will move in slowly. So I think the volumes will come, but they will come with a lag effect. It's not that Q3, Q4, you would see sudden spurt in volumes coming through. And therefore, our own sense is that the lower end of the value chain, as far as consumption is concerned, select FMCG stocks, select footwear stocks as an example, certain apparel stroke grocery players, I think they should see the first element of uptick in terms of consumption demand and in terms of volumes. same store growth, as we call it, or otherwise revenue trends, which should improve. Consumer durables, and specifically white goods, should see demand coming back, but it should be slow and steady. So we are not going out there and buying these stocks as we speak. I think we're better off with FMCG, select capital names, select footwear names, which look better off from a risk reward perspective.
You know, what we'll do is take a quick commercial break here. We'll come back with some technical calls. Sudarshan Sukhani and Mitesh Thakkar are going to be with us for that. And we'll sort of get you those trades in just a bit from now. Stay with us.
Welcome back. The color across Asian markets is mixed. A little bit of red, a little bit of green, but the color across our windows in Mumbai is entirely grey. It's been absolutely pouring for the last 24 hours and very, very heavy spell of rain since last night. Waterlogging has been reported in major parts of the city. Schools and colleges are shut for the day. So let's take stock of the situation. Mahesh Palawat, VP Meteorology and Climate Change at SkyMet, is with us. Mahesh, thank you so much for joining in. So what is the forecast next couple of hours? And how is it likely to be for Mumbai?
See, now we think that moderate intensity rain will continue throughout the day with short breaks in between. And until 5:30 hours morning, there was 185 millimeter rain over Santa Cruz and many other parts of Mumbai and suburbs. They have also recorded around in the tune of, say, 200 millimeter rain during last 21 hours. And these heavy showers are expected to continue intermittently until tomorrow, and thereafter there may be some reduction in intensity because the cyclonic circulation which is persisting over Northeast Arabian Sea will move away, and the depression which is over Odisha, South Odisha, it will also move up to South Chhattisgarh, but its impact will be reduced over particularly over coastal areas of Maharashtra. However, South Gujarat may continue to get heavy to very heavy showers.
So reduction in intensity would be day after tomorrow, you're saying?
Yeah, day after tomorrow. And by tomorrow evening also, we think that intensity will go down slightly. But moderate showers with isolated intense spells may continue. But overall intensity may reduce by tomorrow evening. And day after tomorrow, there will be further reduction with short breaks in between. Light to moderate rain is anticipated during that time.
Okay, this would be, you said that up till 5 a.m. this morning, there was 185 mm of rain recorded at Santa Cruz. This would be among probably the wettest spells of the season for the city, MMR?
But on 16th also, 16th night, there was 245 millimeter rain in 24 hours. But main intensity was between 11:30 night to 2:30 morning. During this 3 hours, I think rainfall was around 134 millimeter. That was the heaviest spell in short duration. And this is one of the second, you can say this is the second heaviest spell. And usually during month of July, 2 to 3 heavy spells are most probable over these areas due to the formation of a low pressure area over Bay of Bengal or some disturbance over Northeast Arabian Sea. But this year we have not seen very inclement weather like this, which is presently we are witnessing now.
Yeah, I mean, in a way, I mean, hopefully everyone is safe, and in a way it's perhaps good because July seemed to be a bit drier than usual, at least for the Mumbai region. So very quickly, last 30 seconds, sir. Overall, monsoon so far in terms of just the quantum of rainfall and its geographical spread, how would you rate it?
It is 101% as of now, and although statistically it is showing that Rajasthan has recorded very good rain, but rainfall was very heavy until first half of July. Thereafter, weather is almost dry. So Rajasthan is farmers of Rajasthan are eagerly waiting for rain. So we think that by 24-25 rain activities.
I think we lost the line there, right? I mean, can you guys hear Mr. Palawat? No, I don't think we can. I think we lost the line there. Maybe rains, right? Mr. Palawat, if you can hear me, sir, thank you for joining us with that with that quick perspective, I sometimes wonder with the amount of rain that you see around you, right? I mean, water harvesting should be done on war footing, right? In a state like, especially in a state like Maharashtra.
Yeah.
Where you're talking about rain for 3 months, and then there is, and then you're dependent essentially on what the rain that you got. So, but that's another story. But I think, water, of course, is going to be one of the big issues going forward beyond the here and now. So, for a later time. Let's just get back to the market, right? I mean, SPML Infra was a stock that Nimesh put up on his D Street chatter list. I think this was last week. Yesterday, he said that there is the order perhaps which is coming, and I think that order has come through. It's a small name. Stocks, of course, blasted higher. Nimesh, congratulations.
Thanks, Prashant. So, yes, they've backed the order. It's an official announcement that they've backed an order worth 1,070 crores. And this is for water supply for the Indore government. So, that's the order for. Now, just to put into context, as of 31st of March, the company's order book was close to 3,000 crores. And they had said that they were L1 for another 2,500 crores. So maybe all these orders are part of the L1 that they already mentioned in the March ended quarter. So that's the perspective in terms of the order size. Now about the company, the stock is now currently trading at close to 40 times on current PE. In the last 6 months, the stock has rallied 70%. So there has been a big up move in the stock price. But in Q1, the sales declined for the 6th consecutive quarter. And for the last 1 year, the company has been reporting operating margins of between 5 to 6%. So that's the operating margins and the numbers. But a big order win for SPNL Infra of 1,000 odd crores. And as I said, they had announced that they were L1 for close to 2,500 crores. So maybe all this is part of it. But you might see a bit of further reaction because they've backed a large order win today.
Nimesh, the other one is, thanks for that, that's SPML. The other one is Adani Ports that you put out yesterday, right? I mean, the name came through?
Not really, Prashant. So, while there was a large block, 1.5 crore shares, but it got split between the two exchanges, BSE and NSE. And hence, maybe the reporting has not come. The volume shows that there was a high delivery marking, and that was because of the large block of 1.5 crore, where I understand one of the largest FI was a buyer in that block deal yesterday.
Okay. I mean, the whisper name is Fidelity. Nimesh, thanks very much for that. So that is Adani Ports for you as well. D Street Chatter coming up a little later in the day. We'll take a quick commercial break here. We're going to come back with a pre-open session. We'll also have the telecom story for you. Gaurav Malhotra of Access Capital to talk about, what seems like tariffs moving up. Not a hike, but tariffs, the floor seems to be moving a little higher. I guess that's the way to put it. Conversation with Gaurav on the other side. Okay, welcome back. There's just market pre-open coming up for you in just a bit from now, right? We'll look at what's rates are in a bit. But let's just get you the technical trading ideas out of the way. Sudarshan Sukhani and Mitesh Thakkar are with us with exactly that. Gentlemen, good morning. Great to have both of you here. Ended higher, not quite at the highs of the day, but strong close. Mitesh, flattish start this morning. That's the implied open. What is the trade? What should be trailing supports, and what should one do? Indices first.
Morning, Krishna. I think on Wednesday we were talking about the fact that after a long time, the intraday indicators are now looking up on the hourly to hourly charts, and we should have some kind of a relief rally. I think that's happened. The first targets were around 24,950, 25,000. I think that zone was tested. We just ended below that. Now, I think with the way the price action happened on Monday, 24,800 on the Nifty is the big support area. Any declines closer to that would be an aggressive buying opportunity. And on the upside, the next target would be in the zone of 25,260 to about 25,320.
Sudarshan, good morning. What about you? How would you approach indices first?
Yeah, good morning. Well, the idea was to go and buy a dip yesterday. If you have a long position, I would suggest closing it. The chances are that today will be a choppy day. A narrow range and choppy day doesn't give any rewards to anyone. So avoid the Nifty and the other indices for today. Focus on stocks.
Yeah, all right, let's get to stocks then, Sudarshan. What's on your radar?
Well, it's an all buy list. 361 is a buy with a stop under 1030. HDFC Bank is a buying opportunity. It's also a positional trade with a stop under 1960. ACC is a buy. I'm hoping the correction is coming to an end with a stop under 1800. And Oro Pharma is also a buying opportunity with a stop under 1050.
Okay, all right, gentlemen, got that. Let me come to Mitesh as well. Mitesh, morning. What about you? Stock ideas for the day?
I have more of buy calls. HDFC AMC is a buy with a stop at 56.80 for targets of 5800. Colgate is a buy with a stop below 2209 for targets of 2260. A sell on REC, it's a conditional sell. So if it breaks 375, take a short position. Look for targets of around 362 and keep a stop at 381. And a buy on AB Capital with a stop at about 277 for targets of 295.
Okay. Got that. Thanks very much, Mitesh and Sudarshan, for those specific trades. We'll chat again at 9:10 on some of these. We've got the rupee, which is opening up at about 87.25, 87.35 was the close yesterday. And there is a 10 paisa lift, which is coming through on the dollar rupee rate. Now, SEBI is proposed to ease IPO norms for large companies in terms of the requirement with regards to how much they need to dilute above a certain threshold, etc. And this has got implications for specific companies, as some brokerages are highlighting. Let's get the proposal first, and then we'll get to the impact as well. Hormuz has read up on this, and he's got details. Hormuz, good morning.
Morning, Prashant. And so a slew of measures that SEBI has highlighted with regards to these minimum public offers for large-scale IPOs. And the rationale they highlight for this is that such large supplies could be difficult to absorb for the Indian markets, and hence they are coming out with this proposal. But a striking feature of that proposal is one of those which says that issuers with a post-IPO market cap of over 5 lakh crore rupees will have their minimum public offer size could be reduced to 2.5% from the current proposal of 5%, from the current threshold of 5%. And although in these recommendations they have retained this clause that the 35% of the IPO size will be reserved for retail investors. Now, such a move could have implications for an IPO as big as Reliance Jio, a potential IPO whenever it happens. There's Citi is highlighting in its note that this could have meaningful positive implications for Jio's IPO. They are valuing Jio platforms at an enterprise value of $135 billion in their sum of total parts. And they mentioned that in case if this 5% threshold was to remain, this would result in an equity supply of over $6 billion whenever Jio's IPO happens, which could be too large for the Indian market to absorb, particularly for the fact that 35% of those would be reserved for retail investors. But in case it is revised lower to 2.5%, it would result in a supply of $3 billion. And this would not only remove a supply overhang, but also limit the holding company discount for Reliance Industries during the IPO. So these are some of the positive implications that Citi is highlighting in its note, expecting some positive implications for a potential Jio IPO going forward.
Okay, all right, got it. Hormuz, interesting. Thanks very much for keeping that on our radar as well. Let's discuss this development and, of course, the fact that Jio has done away with its lowest priced packs and what that really means. We have Gaurav Malhotra, Executive Director at Axis Capital, joining in. Jio definitely in the headlines this morning. Gaurav, thanks so much for being with us. Okay, so what do I discuss first? Let's start with the tariffs first, because that's already happened. The IPO, of course, everyone's waiting for. What are the implications? Because Rima was telling us that by doing away with this 249, I think was the pack, and taking it up to 299, it's effectively a 20% tariff hike. What are the implications?
Yeah, so see, there are like 2-3 things to sort of note in this, right? One is that this is a targeted implied hike, right? Versus a wholesale hikes, which we have been seeing in the past 3 hikes. So this is just taking the the base plan and sort of eliminating it and sort of getting people to upgrade to the next tiering of the plan. And that leads to that 16-17% hike from that perspective. At a blended level, the benefit from an ARPU perspective is obviously going to be much smaller. So it could be, say, 3, 4, 5%. But I think so the more important aspect is that, look, tariff hikes have been built in all analyst numbers, right? Over the next, say, 3-4 years, like we are taking an assumption of, say, 7 to 8% ARPU CAGR for Jio. So the tariff hike per se is not the sort of the key sort of aspect to look at here. The aspect is that, look, rather than making tariff an event, which is what it has been till now, you are sort of doing a more sort of structured hike. You're essentially trying to sort of fix the current issues, right? What are the current issues? That you're giving a lot of data at very low levels, so people are not sort of really upgrading as quickly. The other thing to note is that, look, globally, this is the way operators take up tariffs, right? So they will discontinue a plan. They will sort of give you a new revised offer, which will be at some premium to your old plan, but with that they will give you some additional sort of data. So this is how sort of globally the large telcos sort of do increase their tariffs. And this is, if this were to start, this is just the first point. So we'll have to see whether others follow, whether this is a more sort of ongoing phenomena, but at least it's a good start the way we are thinking about.
But Gaurav, again, coming to the implication part of it, there were some notes that were suggesting that this plan, this 249 plan, I think was contributing by a little less than 10% to overall revenues for Jio. So will it be meaningful? And should we expect the competitors to also do something of the same? So again, I mean, ARPU impact, revenue impact, any rough numbers or ranges we can work with?
Yeah, so from our perspective, we have assumed that will have some impact of around, say, 4%. But like I said, the more important aspect is that, rather than, everyone waiting every 2 years for like some wholesale tariff hikes, if the hikes can be more structured, more targeted, that actually is beneficial to everyone. It benefits the operators, it benefits the users also. So we are actually focusing more from that perspective rather than, whether it's a 2% or a 4% kind of a benefit at this particular hike. And the second point is whether the other operators will follow. Look, Bharti has been saying this quite regularly, that they do feel that, look, the tariffs need to be structured better, right? So they are quite open about, fixing that. And obviously Vodafone has its own challenges. So the likelihood of the other operators, following suit should be a reasonable probability in our view.
Okay, Gaurav, I have a slightly longer run question. Morning, Prashant here. The people start using all these large language models more and more, right? I believe power, yes. I mean, I think compared to a simple web browsing the web, using some of these requires far more. Data usage is higher. I don't have the numbers. But I do believe that is true. Can you confirm that? And does that provide a broader lift to everybody in terms of data consumption if this really picks up in a big way?
See, to be honest, I don't have the exact numbers with me, but let me give you the context. Right, today, Bharti Mobile, on an average, per day data consumption is around 0.9 GB a day, right? Which on its large base means that there are enough and more people who are like at 1.5, 2 GB, even more consumers of data. And this data consumption is an ongoing structural trend, right? So one is that your LLMs, but look at anything, right? Every app progressively only gets heavier. The videos get of better quality. So data consumption keeps increasing on an ongoing basis. At 8 GB a day, 8 GB a month, people used to say that India is on the higher side of global, so how much data consumption increase? We are now closely almost touching like 30 GB, and this is a structural trend. So obviously all your LLMs and all this AI etc. will obviously help, but everything is going to be helping data consumption. Things which we would not even see it, right? So like I said, apps, video quality, games, everything is getting a better quality progressively.
I mean, if there's one thing we're using more of and we will use more of is data. And that is absolutely right. Thanks very much, Gaurav. Good chat and good perspective overall on an important sector. We don't spend too much time talking about that sector. Few listed companies, I guess that is why. But stocks have done very well. Bharti and others as well. Just a quick look at the stocks, right, which we've covered through the course of the morning so far, and where they've all landed as far as the end of the pre-open session is concerned. So Vedanta is up about 1%. Hindustan Zinc is up on your screen about 1.5% there. GMR Airports is raising money, right? I mean, 1% there. There's Lodha Developers, which should put out 0.6%. Nothing very large across the board. By this time yesterday, you had about 10 stocks on the back of GST-related news, which were up between 5 and 10%. There's Indocount, Vardhaman Textiles, which are also in focus, where with regards to cotton imports, some of the duties have been taken away. So a slight lift as far as those sectors are concerned at this point in time. Let's just get you the 9-10 call. Sudarshan is with us. Sudarshan, what do you have?
Well, I have 361. Consider buying that with a stop under 1,030.
Mitesh, what about you?
Well, you go with the buy on Colgate for targets of 2260.
Okay, Colgate and 361 are the two specific names which are coming up on the radar. Mitesh, since I have you, just one more name. Maruti saw a big move yesterday, and I was looking at the F&O stats, big increase in open interest as well. Technically, how is this one looking?
I think Maruti looks very strong. One, it made a fresh. There's a big gap. The F&O additions are all good. The only problem is that the way the stock price moved yesterday, there's always a chance of a pullback. Give me one and I'll be very happy to buy it around 13,800, 13,850 and add more on declines. I think the stock now will be staying about 13,400, 300 zones, and therefore any declines would be welcome buying opportunities.
Okay, all right. Mitesh, thank you very much for that. Sudarshan, thank you very much. 3 minutes to go for market open. Let's just talk about IDFC First Bank now. Gaurav is here to tell us why. Gaurav, morning.
Well, yes. IDFC First Bank is going to be in focus because now Investec continues to be bullish on the stock with a target price of 85 rupees per share. What they're saying is that they recently met with the management, where management reiterated their guidance for ROAs somewhere in the range of 0.9 to 1% by the end of FY26 versus what it is right now at 0.5%. Now remember, management is saying that this ROA pull will be because of three factors. First is operating leverage, which they believe operating expenses will increase in the range of 11 to 12%, while the loan book growth is expected to increase by 20%. Second lever will be credit cost. Remember, they have given a guidance of 2 to 2.05% of the credit cost versus what it is right now at 2.8% in Q1 FY26. So credit cost is also going to be lower. And third is the normalization of NIMs. Now all these factors will pull the ROAs towards 0.9 to 1% as per management. Even with this, Investec is also being bullish. What they're saying is that IDFC First Bank remains one of their top mid-cap picks, and they also believe that operating leverage and other rooms like more room to cut SAR rates, that will actually help the bank to get ROAs to 1%, and that is the reason they have given a target price of 85 rupees, which leaves further upside of around 23% from here. So definitely watching out of this stock today.
Okay, all right. Thanks very much for that. Maybe we just run through this about a minute to go, actually, not very much to go for market open. But autos, I think we did pick out and put out. Maybe we just look at names like, the durable names, right? PG Electroplast. I don't know if you have time to pull those up. Amber, Blue Star, IFB, Voltas, Havells, Whirlpool. Apart from autos, this was the other pack, right? PG is up 1.5%. Amber is slightly higher. Maybe Blue Star comes up. IFB, Voltas, Havells, Whirlpool, etc. the other ones, which perhaps we're able to pull up right now. And of course, there's apparel and footwear and cement and so much was happening, right? But all, of course, related to that one theme, which is hopes around GST rationalization. Today, of course, much quieter after yesterday's big moves that we saw across sectors. What do we have? First rates coming up. It is absolutely flat. Nothing very much to go on with, but Nifty starting with 20-odd points, 24,900. Sensex is up 120 points, 81,350. Small cap index is, wow, it's up about 1.33%. Is that the actual rate? No, it's not. It's just changing now. 17,799. 17,800. Those are the first rates. Again, absolutely flat. And I think the small cap index will come up on your screen. The mid cap index, beg your pardon, which is also 0.15. So nothing at all. Nifty heat map should give you a sense of where most stocks are opening up on the index. and then we will move on with individual names. More down than up at this point in time. RIL is higher on one end. On the other end, you've got HCL Tech. Surabhi.
Okay. Let's take a look at what's going on. Actually, if it was not for Reliance, then the market could have seen a bit of red as well. Reliance with the news on Jio, the changes in their packs, and obviously the SEBI moves as well, which perhaps, the market would want to believe it takes it a step closer towards that much anticipated Jio listing, 2% up on Reliance Industries. It has taken Bharti up along with it as well, 1% higher on Bharti. Let me just check Vodafone Idea. There was some commentary from Vodafone Idea as well on some AGR relief and what the next steps could be from the government's perspective. 2% up on Vodafone Idea. So Telecom is looking good this morning. NTPC 1% higher. There's some gain on Adani Ports, about 1% or so. There's Hero Moto that's still continuing its good form from yesterday, 0.5% up. And then it starts getting really quiet. Tata Consumer, Trent, Titan, and Lever. Just some consumer names which are seeing a little bit of green, but not too much. On the downside, there is Axis Bank, Shriram Finance, Bajaj Finserv, Bajaj Finance, SBI Life. So basically, financials are not that hot this morning. And M&M is seeing some profit taking after its big run as well. 0.5% lower on Mahindra & Mahindra, but it's really Telecom and Reliance leading the charge today.
Well, that's right, Shirbi. And a couple of other stocks, Vedanta, they're going to be meeting going to be having a board meet to pay out dividend. The street likes that. That's the one that, in fact, is in focus. And that NCLT hearing as well is sometime during this week. So that's why that stock is up 1.5%. Reliance Industries, that's the big boy in there. Yes, it lost its way a little bit. Now it's gradually moving up. And that's the big gainer actually this morning. Bulk of the gains that we're seeing out of those 40 points are on account of Reliance Industries. But from the broader markets, stocks are doing a thing of their own. HLE Glasgow, they have announced acquisition of assets of Ameris, and the street likes it. That's one of the top volume gainers from the broader market. So HLE Glasgow should come up for you on the screen. The other one we're looking at is All-Time Plastics. There was a large trade. Manish Shukrani bought closer around, a stake for closer around 10 crores. That's the other big mover this morning. That's up closer around 4.5%. I think it's a recent listing. You have Lakshmi Organics as well. That's moving higher on fairly good volume. So all those, the big movers in today's trading session. And Indocount, the other one that's moving very, very well, up 6% as we speak. That one, in fact, is flying away. And also keep an eye out on PG Electroplast. Yesterday, the stock saw a big run. There was some short covering that we saw. Now, it's on the verge, actually, of moving out of the F&O ban. I think either today or tomorrow, that's a strong possibility that one comes out of the F&O ban if it continues with such strength. So that's the other one that I'm looking at today. In terms of losers, SML Isuzu has come in for some mild profit taking. That's down close to around 4%.
All right, I think we've got the sort of stocks opening up and down. Nothing, of course, like in terms of the sheer size of the moves, nothing like what we had yesterday. But 40 points is not bad after a 250-odd point bump that we have got in terms of trade. More stocks in a bit from now. But let's welcome in Rajiv Batra, who's head of Asia and co-head of Global Emerging Markets Equity Strategy, Chief India Equity Strategist at JP Morgan. Rajiv, good morning. Great to have you with us here. Thank you for your time. The question is about flows, Rajiv, and FII flows, for all the bluster sometimes that we get, do matter because locals have been big buyers, some $55 billion YTD. FIIs have sold about $13.5 billion YTD, and of course, we know what the market's done, right? Or not done. What are the 2 or 3 important determinants from here which will tell us or mark the return of foreign money in a sustainable way? Is it valuations? Is it something else? Rajiv, go on.
Thanks, Prashant. Thanks for having me over here. I'll say only one variable is important, growth. And I have said on your channel in past also, foreign investors are growth tourists. They invest in the destinations that offers them premium growth. Till India was offering them, India was all in favor. Now, even if I will say that, absolute sense, India valuations are expensive, but in a relative terms, looking at average valuations of India to emerging markets or other EM peer, we are well below the average ranks of that premium also. Still, people will not visit because the complaint will be that PEG ratio of countries still not around 2 or below 2 kind of a mark. So only one variable which is important is growth. And hence you can see in flows. Flows, if you take the passive guys out, because in 13 billion, close to 8 billion has come from the passive side in India, net inflow. Active guys have seen close to $21 billion kind of an outflow. So growth is a key ingredient for active foreign fund managers to make a comeback.
Okay, and what? So you're talking about earnings growth, Rajiv, right?
Yes, it will start with your high-frequency macro growth data points, which are your monthlies and weeklies, and then followed up with the earnings data print. We have a pretty good high single-digit earning growth for MSCI India for first quarter FY26, but that doesn't still bring India's PEG ratio to close to 2. So once we come around the territory of 2, that is around 12 to 13% earning growth kind of a criteria, it may satisfy my foreign investors' need.
Just one clarification, that flow number that you mentioned, could you just repeat that? I said $13.5 billion out of India from foreigners, and then you said passive and active.
Passive and active.
That was in the... Sorry, go on.
Yeah, the passive and active divide is net inflows in India through passive route is 8 billion, and net outflows are from active side is $21 billion.
Ah, okay, that's a big one, and that tells you a lot as well, right? That active managers have been going elsewhere, where perhaps earnings growth is higher, or maybe tactically, I mean, it's just a better play because of valuations. We know that, Rajiv, we've seen that. South Korea has been a market well loved. There's been money going into China as well. The question is, when does it reverse? Now, you said 12 to 13% earnings growth. What is the visibility you have in the future? I mean, do you see that happening? We got a ratings upgrade from S&P. For instance, S&P is saying this whole US tariff business is not going to impact India too much. So when do you see us getting to 12 to 13% earnings growth?
So first of all, on the rating upgrade, market participants believe it is a belated one, but I'll say it is still it still signals a positive shift in perception of India economic strength and stability, which matters a lot from long-term perspective when you take into account borrowing cost and the risk premia for country. Remember, it has been declining from 4.5% a decade back to now almost 2.5%. It can slide down further from here and supports India valuations in future. Now, what could bolster the earning growth and GDP growth? I believe catalysts are getting unleashed one by one. Like, let's take into account monetary policy, which have been in complete drive from November last year. We have seen cumulatively 100 basis point repo rate cut, 150 basis point CRR cut, and now fiscal has started giving full push. Remember, this is not just something new we have seen from fiscal side. Almost for a year, consumption has been getting boosted by fiscal measure, like first by subsidies, then followed by tax cut for middle class, and now this potential GST tweaks. So the twin policy tightening, which was in play in India till November last year, have now shifted towards safely to twin policy easing. So give it a quarter now from here, or max 2 quarters. Expect your double-digit 12 to 13% growth handle will appear on Indian equities.
Oh, okay, that sounds good. Just 1 to 2 quarters and we get back to double-digit growth. I think the bulls will love the sound of that, Nigel.
Well, that's right. Hi, Rajiv. Good to see you. Then what are the sectors that you're most bullish on? Because the globe is still a very sticky place, but it appears India is set to give up its underperformance. Last 1 year, we have underperformed. The earnings have been weak. Some domestic factors as well have been soft. Let's talk about the largest constituent. That's the banking names. What's your view out there? How do you approach it? There have been some kind of pressure in terms of asset quality. Credit growth as well has been soft, but the optimism is that we'll gradually see a pickup in credit growth. Your take, and what do you like from there?
No, so definitely when you are doing this much amount of an easing as per economic concept, what we have learned and what we have seen in the previous cycle also, that it may take 2 quarters, it may take 3 quarters, but usually credit growth start appearing post the start of the monetary policy cycle easing with this much amount of a lag. Taking that into account, it will be unfair to assume that we will immediately go towards 18, 19% kind of an handle. Because remember, when the 2 big institutes got merged, at that point of time, the structural credit growth of the country brought down from 16.5 handle to 12.3%. So if we scale back to 11 to 12% kind of a zone also, it will be very healthy scenario overall. And remember, as I've said, the big part of India credit growth story for the last 5 years or maybe decade have been consumer. Because of excessive tightening, or you can say higher risk weightages and stuff, that particular zone start getting impacted. But now with the easing coming into the picture, even reductions in the risk weighted norms or provisionings also will try to spur up credit growth initially from that end. And once, because of that, consumption comes in picture, you will start seeing demand from corporate also, maybe led by working capital need or even by the capex related need. So it's kind of a cycle which got stopped, and maybe we are kick-starting the new cycle over here as such. But all in all, we are very gung-ho on financial space, and particularly private banks and non-banking financial companies.
Got that. Is there a way to make up, or actually let me ask you another way, for foreign investors that you advise, interact with, is this India, US, and what has happened there with regards to relations, etc., ever come up in conversations? In what way, shape and form? Obviously, this additional 25% tariff is not, even if it goes into effect from the 27th, it's not going to be permanent. I mean, it'll be negotiated lower. But does that come up, and in what way, Rajiv?
No, so most of the time, the geopolitical uncertainty comes off the investor's mind whenever it starts hitting the headline. But if you look from the last 20, 30 years perspective also, it has rarely derailed the long-term trajectory of Indian equity market. Usually this kind of a volatility ends up as an opportunity to accumulate the quality stocks. Now, the question that comes from investors are that how this equations will impact the growth. Now, I do agree, whether it's a political equation or a trade along with the capital flows, interact with the growth from external demand perspective, because this external demand has been the key driver for India GDP growth from 2019 to 2024 rather than the private consumption. Now, suddenly, if this factor starts slowing down, you need extra growth boost coming from the other side, which is your domestic demand and private consumption. So till you don't see a resolution around the corner on that particular conversation, I think most of the burden for driving growth will be taken on the domestic end. But I do believe, like near term, we should not get too concerned about if this situation persists for longer, how we could be impacted. Yeah, number one will be the risk premium, which we have enjoyed due to the geopolitical diplomacy and got the risk premium of 2.5% from 4.5-5 territory. That can scale up back if the situation persists for a longer time, or the trade and the capital flows for country start getting impacted. But too early to say, because the situation is still evolving.
Rajiv, finally, from a thematic perspective of just building a portfolio for the next leg of the bull run, if I may say, I mean, if this is still a structural bull run in India, should that portfolio be more geared towards consumers? And this is a play both on obviously earnings and also valuations and tactical call. Should it be more geared towards a revival in consumption and therefore consumers? Or should it be more geared towards industrials and capex, which was the case? I mean, those were the earlier leaders of the previous cycle.
No, the thumb of the rule in emerging market is you invest as per what your policymakers are guiding you towards. So since February, we have seen the pivot has been made towards consumption side from capex. And right now we have seen, even with this GST tweaks, it will be more favorable for consumption. And rightly so needed, because as I've said, if external engines are slowing down, like JP Morgan estimate close to 1.6% GDP growth only in US. So even if the tariff concern resolve, external demand is not gung-ho overall. So taking that into account, domestic demand will be the play, and how you play the domestic demand, where maximum support you are getting your policymaker towards consumption side. So we pivoted towards consumption over capex in February last year, and we are still reiterating that. And the broad overarching theme, not just I will say within India, but emerging market with the global growth slowdown upon us, is domestic demand over exporters. So more you position your portfolio towards domestic demand, like financials, staples, discretionary, real estate, hospitals, and maybe some of the material plays which are purely dependent on domestic demand, that will help you generate a high return and maybe even outperformance to your regional peers.
Okay, all right, Rajiv, we appreciate you joining in and giving us all of those details. All the best, and hopefully, as you said, things will recover from here on. Positive measures being taken both by the centre as well as the RBI, and those results will be seen in the coming quarters.
Thank you.
Well, let's move on then, and let's move on to JK Cement. We have with us Anuj Khandelwal, the business head, Grey Cement Division at JK Cement, who joins us on the show. The three big key talking points that we'll be looking at in today's interview is that you have expansion that was announced in Rajasthan as well as Punjab, GST rationalization. What's the impact on cement, as well as how is cement pricing and demand shaping up? To answer all of that, we have Anuj with us. Hi, Anuj. Congratulations first. You know, JK Cement enjoys peak valuations, peak multiples, but earnings growth has been superb, volume growth has been superb, and now you're peppering the street with that 4,000 crore capex plan that you've announced. Break it up for us. How much of this capex plan will be via internal accruals, and what kind of debt will you be using to fund this?
So, Rajal, firstly, many thanks for having me on the show. Yes, we've announced an expansion in Rajasthan, where the integrated plant will be in the Jaisalmer sector, and there'll be 2 grinding units, one in Rajasthan and one in Punjab. Overall, the capex will be around 4,800 crores. 65% will be funded through debt, while 35% will be funded through internal accruals.
Got it. All right. And what does this mean in terms of the debt trajectory? As of last year, I think you ended consolidated debt was around 3,200 crores for the entity. With this capex plan, what is the peak level we're looking at in terms of capex?
So overall, look, you are right. The net debt last year hovered around 3,000 odd crores. Our estimates are that once the peak debt will reach to around 5,500 crores as a net debt. Right now, the ratio which we look at more closely is the net debt to EBITDA, because it tells us our ability to service the debt. Last year, it was around, we closed at 1.3 times of EBITDA. Even June quarter was around that number. Our internal target is that even at the peak levels, we should not, be much beyond 2. So around 1.8 to 2.2 is the sensitivity which we kind of look at. So peak debt levels of 5,500 crores, but net debt to EBITDA of around 1.8 to 2.2.
Okay, all right, got that. Now, with this capacity expansion, you'll be at around 39 million tons, approximately, with what all you have announced. But you have to get to around 50 million tons. So for that additional 11 million tons, where are you going to be looking at? Currently, I think most of your capacity is in North India, and that seems to be the focus area. For the remaining 11 million tons, any kind of geographic target you're looking at? A couple of big assets, Anuj, which are available in South India as well. Why don't you go ahead and just buy one of them? 5-8 million tons will come easily.
Look, I really enjoyed this conversation. See, look, we've grown from 20 million 2 years back to now with a visibility of around 39 millions by, let's say, mid of 2027. So that's a very, very steep kind of a journey. And, it's not just enough to put up plants. It's also important to monetize it. And our track record is good, but we want to maintain it. To your second question on where do we see the path from 39 to 50 million, there are many possibilities. One, we are looking at the South cluster, where we have a plant at North Karnataka, Muddapur. There in that cluster, we want to aim at around 5-6 million tons post the Jaisalmer expansion. And after that, we can again circle back to Central India and try to put up another line. So, combination of that would get us to 50 million. But as I've always reiterated in my earlier conversations, we try to balance the need for growth and financial prudence. So as the things progress, we'll be announcing basis our financial situation.
All right, Anuj, for this particular capacity that you have announced of around 4,800 crores, a couple of brokerages have written, like, JM Financial, they are talking about a 10-year capital subsidy that you'll be entitled to. What is that amount over the next 10 years that you'll be entitled to? As per their estimates, it's around 1,000 crores. Would that be fair?
Look, I can't divulge the exact numbers, but just if I can give a breakdown, basically, any of the capital investments across the country, basically there are 2 types of subsidies. One is the capital subsidies, which you generally utilize for large investments. For example, in this case, Jaisalmer plant. And there is a SGST reimbursement incentive, which you generally utilize for relatively smaller investment, which is our 2 GUs in Rajasthan and Punjab. So capital subsidy, look, is a percentage of the effective capital, investment, and it really depends on how much you are investing and what area you are investing in. So there's a standard package by government of Rajasthan. I can't divulge the exact numbers as to how much will it yield to because it's confidential, but suffice to say that combination of all the incentives can bolster our IRR by a couple of percentage points.
Okay, Anuj, what I was getting at is there any risk to this particular incentive? I asked this because everyone is celebrating that we're going to see some rationalization of GST rates. Now, as you said, SGST will be some part of that goes to the state as well. So effectively, if the GST comes down from 28% to 18%, then instead of 14%, the state will be getting 9%. Just, going by this example. In that case, does it put some kind of risk to the incentive you'll receive, the kind of leeway you'll get? Tell us your understanding, because everyone's celebrating the good part, but could this be a risk?
So we are also celebrating it because, look, GST rationalization has driven a lot of positive sentiment, and it will finally lead to a lower cost of consumption for our customers. In terms of risk, as far as the GST policy goes, look, on places where you have a capital subsidy, it really doesn't matter how much GST are you paying to the government, whether it's at 28% rate or 18%. It's basically a fixed amount of money which you get over a period of time, right? So it is not really dependent on GST rates being 28 or 18%. Places where, yes, there's a SGST reimbursement, what would happen is, theoretically speaking, if the rates come down from 28 to 18%, and of course we need to see the fine print, etc., basically the per ton incentive will reduce. But in most of the packages, there is an annual ceiling. So rather than meeting the annual ceiling, let's say by December or January, you might start hitting it by March, or might forego a little bit. So it's not a huge impact at any stretch of imagination per se to the subsidy income which can come to the companies.
All right. So you don't see this as a big risk. You rather celebrate the fact that the cost of constructing a house goes down. And in that case, it could help volumes and help demand on ground as well. Would that be the way to look at it?
Sentimentally, yes. But,
it's inelastic. Cement is inelastic.
Yes,
and
exactly.
as a cost
So
of making a house, I'm reading a note today, it is just around 1%, less than that as well. So it's a more sentimental positive. Is that correct?
It's a sentimental positive. Can help infrastructure sectors a bit more. But on the housing sectors, yes, look, if a person has decided to make a house, he will make a house. Not really, a little bit of GST rationalization on cement will not change the decision that much. But yes, from an infrastructure projects perspective, it can lead to a significant cost reduction. So overall, I understand that cement is slightly inelastic, but sentimentally is a good positive for us.
All right. And if you could tell us about incentives on an annual basis, what is the rough incentive that you receive, if you have that number handy, as a company, JK Cement?
So look, I don't want to get into specifics. I think, it's a good number, but I don't want to get into specifics.
All right. The short point is just saying there's no risk to the capital subsidy that you get as well. As you're saying, it's assured by the state government. Got that. Good to see volume growth. You outpaced the industry. 15% grey cement volume growth came out of nowhere. And from there on itself, the stock has started its big rally. What's the view for the year? What kind of volume number do you end this year with? And you'll definitely be gaining market share because, the industry grew at around 7% at best. Your volumes grew at 15%. So target for this year.
Yes, Q1 was good. Industry, I guess, grew by 5-6% and we grew by 15%. But look, a lot of our growth came in central India where our capacities are still new. So we were able to gain a lot of market share in central India. In North India, the growth wasn't that much, but the new expansions will solve for it. Overall, the full year picture which we are looking at, we are really targeting the magical number of 20 million tons of sales this year, which will be around 13% odd growth versus the last year. This is with the assumption that the industry will grow by, let's say, 6-7%.
Okay, all right. Final question then, with regard to your cost saving measures, you all have been guiding for, I think, 150 to 200 rupees, cost saving. For this year, how much of that will be achieved?
So I think we'll easily achieve half of it. Quite a bit of it is already, I think, in the pocket, around 50 odd rupees, I would say, would already have been realized, maybe 30-40 rupees more. We have many initiatives coming up in the later part of the year, whether it is on renewable power, on AFR, and the likes. Even in the medium term, we have other cost-saving initiatives also lined up. In my previous interview, I also said we have secured a coal mine in Madhya Pradesh, which will get, let's say, operational in 2.5, 3 years' time. And when that happens, the cost of coal will reduce for us for our central plants, where we are becoming much more prominent. So cost saving is a perennial journey, but we are tracking well. And we are on the target to achieve the numbers committed.
All right, Anuj, good speaking to you. Thanks a lot for joining in. You're quite gung-ho about this new capacity expansion. As you said, there is a capital subsidy. There's a bit of a cushion with regard to the state GST as well. And for the year, you're looking at around 20 million tons in terms of capacity. Thanks a lot for joining in. Wishing you and the team all the best in the time to come. Okay, all right. Well, let's move on to our next management. We have Endurance Technologies that reported a healthy set of numbers in the first quarter in a tough environment, actually. The revenues are up by close to 18%. The profit as well was up close to 11%. We have with us Mr. Rajagopal Sastry, the Group CFO, who joins us. Hi, sir. Good morning. Thanks a lot for joining in. First, tell us about this GST rationalization. How it's going to help your business, because you'll have a dual impact, right? There's that ABS as well that comes into play. So for that, your company is required. And if sentiment improves on the whole, then inventory gets cleared out, and that's good for your volumes. So first comment on that.
Good morning, and thanks for having me with you. GST definitely will be a very big positive overall on the economy because it will increase the demand. And looking at our own scenario, yes, we will have an impetus on the demand because of the GST, because the vehicles are going to get cheaper. Albeit there would be a lull till the announcements are made and the demand really kicks in, factoring in the new change in the GST rates. What we are also seeing is that our stated objective of growth in aftermarket will also get a shot in the arm because this will augur well for the organized sector. So overall, for this announcement, while we are waiting for the fine print, while we are waiting for how it will actually pan out and how will be the response of the market for that, our initial thought is that it's a very positive for us.
Mr. Sastry, hi, morning, sir. So right now, I think there are two different slabs, two different rates, 18 and 28%, depending on which component we're talking about. Most of the products that you make, are they in 28% or 18?
Yeah, we do use the 8708 or the chapter for the automotive, and our output is all at 28%.
Okay, so that should move down to, as is being discussed, perhaps that comes down to 18%. I mean, since you're part of the chain, you're claiming the input tax credit as well. Materially, on the P&L, will this cut make any difference?
On the P&L, it should not make any cut. It will only do good to us if there is an uptick in the volumes. And like we said, it should give a good benefit in the aftermarket sales because that is always profit accretive for us, and if that boosts aftermarket demand, and that will be good for us.
Yeah, okay, got that point. Sir, you've had a good quarter, pretty decent growth, 11% growth coming in, and, Europe is a big geography for you. I think you get almost 30% of your business from Europe. So let's just go there. I mean, what are the conversations you've been hearing over the last 3-4 months with so much happening in the tariff world? Is there some additional opportunity? Would perhaps some of your European customers look to source more from you vis-a-vis the US? I mean, I'm just trying to understand if this whole tariff storm, if it has any real implication for the business.
Both our Indian operations and the European operations, we generally produce for the local market. So there is no export exports of our products into US, and there is no exports from India also into US. So we are very much local for local. In terms of the impact of the tariff, yes, it did have certain amount of uncertainty in the OEMs of the Europe. But these demand drop of over, they grew 1.6% in this quarter in terms of overall sales. However, what you would notice is that this uncertainty in the demand in the OEMs has been for quite some time now because of the transition from ICE to electric vehicles and the latest tariff-related discussions. But what we see is that all these difficult situations will have to find an equilibrium, and soon there would be growth back in the European sector, because overall it's a strong market any which way, both from a technology perspective and the demand perspective. And coming to our own performance, we have been acquiring capacities and we have been putting in capacities. We have been very careful in not to add to our costs, which are permanent in nature. And overall, close to 320 million euros of orders we had acquired in the past 4 or 5 years. All these are also helping us to see that our growth is intact. And we are also carefully looking at acquiring companies which are in good health, which are accretive to our margin, which are also synergistic to what our business, like it would be seen in the recent acquisition of Stefferle, which gave us capabilities and also profitability. So overall, our story so far has been good, and our plans for the future as we go forward is also very strong.
No, got that. How big is this ABS and two-wheeler opportunity that you're estimating? I think the government has proposed new safety requirements mandating 100% use of ABS for greater than 50cc ICE two-wheelers and all two-wheeler EVs. Can you talk about what's happening there? Any orders you've got in this regard?
Yes. This is a very important move. I mean, first, primarily, we congratulate that the road safety is being given more importance, and an anti-lock braking system is extremely important element of two-wheelers to promote road safety. If you look at numbers, last year, the country had 2.38 crores of two-wheelers produced, out of which roughly around 30% had ABS. Now, this 2.38 also had the exports, but those are small numbers. If you remove the export numbers, the entire market of, let us say, assume 2 crores would be ABS. And that's a significant market growth of 5 to 6 times. Given in that sense that we're already available there in that anti-lock braking system. So we did have capacities which we announced of about 6.4 lakh anti-lock braking systems per annum, out of which we were producing something like 4.8 lakh. And our aim is that with all the preparations which I have been doing in the past few years, with our own test track, with enhancing our R&D capabilities, both in terms of talent and also homogenizing the technology which we had acquired from our overseas partners. So we are ready for a significant growth in the anti-lock braking system. What's interesting is that we do have the technology, we have the people, we have the R&D capabilities, and we are in discussions with all the OEMs. In the past few years, the quality of growth of the company has been very good in that we were growing across all the OEMs and across all the product segments, which is giving us a good entry point and being a partner of choice for the OEMs to implement ABS into their vehicles. And this is auguring well for us. And what is also important is that it's not only the anti-lock braking system, which they will also see a growth in the braking per se. So we need hydraulic disc brake systems to be easily able to applicate anti-lock braking systems. And that means our demand, the demand for disc brakes and the hydraulic braking systems is also likely to go up, and for which we have been preparing right from acquiring land banks so that we can put up factories. And we also have been setting aside capital so that we are able to invest, and those actions are already in place. And we are seeing that this is a big positive for us.
We'll leave it there, sir. Good getting that perspective. Very, very useful. Appreciate you joining us here on the channel this morning. And good luck with your plans as you execute. I just want to take a quick look at what the market is doing and some individual names. Guess what the number one volume-led gainer is now on the NSE? It's Ola Electric. Ola is up 6%, 43, 44 rupees, and very large volumes at this point in time. There is Vari Energy, which is up about 3%. 3080 has got very large volumes. Number two in terms of volumes. There is Inox Wind, which is up 4.5%. Stocks at about 146. There is Bellrise, which is up 4.5%. Recent listing, stocks at 146 rupees there as well. Actually, yeah. HLE Glass, I think we highlighted this in the morning. 16% on HLE Glass. 483 on humongous volumes, actually, for a stock like that. So HLE Glascoat is coming up. Denta, D-E-N-T-A, 14%. So 391 on that one. There is which is looking very good. And we highlighted this stock, all-time plastic. It started higher and it's up 7%. An influential investor picking up stake, and this one is up 6%. Started, I think, about 3-4% higher, 310 at this stage. So there is lots of stuff which is coming through, and volumes are picking up in right earnest now. We'll take a quick commercial break here. We'll talk to a company from the renewable space, from the solar space specifically. Vikram Solar is going to be talking to us about their upcoming IPO. The issue, of course, open for subscription today. Yanesh Chaudhary, CMD of the company, on the other side. Welcome back. One of India's largest solar photovoltaic module manufacturers is Vikram Solar, and they're coming to the market with a 2,100 crore rupee IPO. It's open for subscription today. In this segment, we will focus on three main points with the management, which will be with us in just a bit from now. Have solar gear makers reached the peak of their returns and margins? That's point number one. It's a question we've asked for already listed companies as well. Second, what is the impact of the ALMM scheme, which aims to boost local manufacturing, and what it spells for the business? Number three, finally, we will also try to understand the company's expansion plans. So let's get straight into it. Yanesh Chaudhary is Chairman and Managing Director at Vikram Solar. He's with us. Mr. Chaudhary, great to have you with us here. Thank you very much for your time. Prashant, this side. Almost 97-98% of your revenue comes from solar PV modules, right? And about 80% of that comes from just 5 customers. So give us a sense of, concentration risk here, Mr. Chaudhary. That is one. Second is the number one issue that I highlighted. Are we at the peak here? Because the worry across the board for companies like you, and we already have a few listed, is that in about 2 years' time, the supply is going to overwhelm demand here in India with the amount of capacities which are being set up. So let's just start there with your perspective, Mr. Chaudhary. Go on.
Hello, Prashant, and thank you for having me. I'll first talk about the sector and how the technology has evolved over the years and why that is the most significant game changer for the solar sector. We started with a 200-watt solar panel. Today we are at a 600-watt in the last 10 years. So the overall form factor is much more efficient over the years. And not all companies are able to, make use of this technology and ensure that they are producing and manufacturing at scale. Vikram Solar has been in the sector for the last 2 decades, and we are able to leverage the power of high efficiency and technology to deliver products. Now, as far as your question on overcapacity is concerned, I think the market, we are sitting at the tip of the iceberg. If you see the way this space has grown exponentially, I think it's still that much more or even more growth is expected to happen over the next 2-3 decades continuing. India is a developing country. We know that every year we need to add 3-5% of new energy in the grid, considering the demand cycles, as well as not much is getting added from the fossil fuel side. So renewable is the answer. And within renewable, solar expects to gain large volumes, considering the depth and the...
No, Ganesh, no one's taking away from the use of solar and the use of renewables anyway. What we are trying to understand from you is your sense of whether a year or two. First of all, how long will it take for your capacities to come on stream? Because the objects of this issue are to put up fresh capacity as well as expand current capacity. I think you're doubling your current capacity as well. How long will it take for your capex to come on stream? And by that time, is there not a risk of maybe some sort of, if not a glut, but definitely an oversupply in the market?
So first of all, our capacities, we are currently at 4.5 gigawatt. By the end of this fiscal, we will be at 15.5 cumulative gigawatt. So we are adding significant capacity out of this fundraise. We will go backward into cell manufacturing capacity next year. So that will be another significant deployment of capital for that. Now, as far as the glut situation is concerned, the point I was trying to make was this is a technology space, and not every manufacturer, every player is able to leverage the power of this technology, considering that there is a lot of evolution that has happened over the years. And going forward, the large IPPs and the producers and the utilities will only need a certain level of efficient products which have bankability as well as stability, because a solar panel has to last on the field for 25 plus years. So this itself is a very big ask, and only so many companies are able to deliver that with a lot of credibility and legacy in place. So Vikram Solar has been in the space, as I said, for 2 decades. We are in the position to cater to this market in the most significant way.
No, I'm just quoting some numbers, Gyanesh. Correct me if I'm wrong. I mean, these are from various research sources.
Yeah.
Last year, we added record, solar capacity. I think it was almost 23, almost 24 gigawatts was added, which was a record for the year.
Correct.
So again, how long will it take for your capacity to come on stream? Does it take a year? Does it take more than 2 years? And what is the current demand-supply gap? And where do you expect it to be? I mean, what is the projected, demand by the time your capacities go on stream?
Great question. I'm sorry. Great question. I think when we talk about... I'm sorry.
Yeah, go on.
When you say 23 gigawatt that has been added last year, that is AC capacity. So when you talk about in solar panel terms, you have to add 1.5 times to that. So overall, last year we added around 35 gigawatt of solar panels. And this year, already the run rate shows 40 AC. So that's about 50 gigawatts of DC capacity being added. Now, within this, if you see the overall ALMM listed capacity on MNRE projections, we have about 76-80 gigawatt available in India. And out of that, if you look at the capacity utilization factor, that you bring that down to another 40%, and then technology, you bring that down to another certain percent. So the overall percentage of high quality latest technology product that is available comes down to a bare 20% of this capacity that is published on the MNRE.
We have 2 more questions. I'm sorry to press on this, right? But that's the number one question on the minds of investors as well. By FY27, the number that I have is domestic supply will be about 75 gigawatts per year.
Correct.
Against a likely demand of between 35 to 40 gigawatts per year.
Yes.
And hence that question that we are pressing again.
So this is nameplate capacity, and nameplate capacity is usually based on the highest efficiency and the full 100% capacity utilization. So where we, in a general sense in the industry, is to reduce that to an available and operating capacity, which comes down to 60%. So this 75 gigawatt, 60% of that is the available capacity. And from there, we talk about technology. So there is monoperc, there is multicrystalline, there is polycrystalline, there is TOPCon. TOPCon, which is the highest efficiency, which is further reduced in terms of available capacity, which is the desired product by all IPPs.
Okay, Gyanesh, must say you've put up a great defense. We've been grilling you on just one point about possibility of overcapacity, but obviously, I mean, you have your ear close to the ground. Very quickly, just on the operations as well, the company saw about a 35-36% growth from the previous fiscal to FY25. You're working, I mean, you were at almost 16% margin. Last year, you closed at about 14.5%. Steady state when all this capacity is on stream. I mean, your current margins, are they the sustainable range? Could it be lower, higher? I know you can't talk too much numbers, but give us some sense on the sort of model that you're looking to build.
I will try to refrain from talking about forward-looking numbers, and I hope you understand that. However, the way we see this market evolving is that there's going to be a lot more domestic content requirement going forward. We already see that there is, Chinese dumping has come to a grinding halt because of the basic custom duty as well as the ALMM. And going forward, we see this continuing. While the market is expanding, the way domestic content is being not just favored but mandated. The government ALMM list 2, which ensures that the cell that goes into the solar panel is also domestic, and hence our grand expansion of 12 gigawatt in solar cell. So from next year onwards, we hope to stabilize our margins at the levels that we are today, probably look at some improvements, but that remains to be seen.
All right, Ganesh, we hope to speak to you soon again on the day of listing. Thank you for joining us. Good luck with the issue and appreciate you coming on here on CNBC-TV18. Thanks indeed. All right, that's Vikram Solar with the perspective on the business and, of course, the offering which is coming through. I mean, lots of stuff added to the list in terms of what's moving. I think Vardhman Textiles is up 7%. Vardhman Textiles is coming up at about 440 rupees. It's a big one, which is showing up right now. And of course, the others we've been mentioning, earlier as well. Ola still remains up 5, and so on and so forth. So,
and the one that's come out of the F&O ban as well.
PNB Housing.
PNB Housing Finance. Last half hour of trade yesterday, I said this, right? That going by the looks of it, last 30 minutes, but it appears set to come out of the F&O ban. Remember, there were lots of shorts in the system. The stock has seen a big correction post that resignation at the top. Now all eyes on the new CEO that's coming in there. And valuation-wise, it trades at around less than 1 times price to book after this sharp correction. So that's one of the big movers this morning, up 2.5%. The other one I'm going to look at now is PG because in the next 2 days, that could possibly come out of the F&O ban as well. Let's get in Mitesh Thakkar. Mitesh, mild green to start off trade. The Nifty Bank underperforming yet again. Your view on the index and 2 stocks that you have for us?
So, one, I think, the opening is slightly better than expected, but the other thing is that the structure remains positive despite the fact that the Bank Nifty is mildly negative and Nifty is practically flat. So I would maintain a positive stance. Disclaimer that we have today initiated some bull call spreads on the Bank Nifty. And waiting in case we get Nifty closer to about 24,850, 820 zones, we'll add similar positions on the Nifty as well. So in that sense, it's a positive outcome. On the stock side, I think it's the telecom names which are very strong, Reliance and Bharti Airtel. Reliance is a buy with the stock below 1395 for targets of 1440 plus. And Bharti, I think, I'm waiting for the stock to clear today's high, which is around 1932, 33. That's the pivot. Once it crosses that, buy with a stop at 1915 and look for targets of 1965.
Okay, all right. Thanks very much for that, Mitesh. Those are individual trades coming through. It's past 10. We'll take a quick commercial break here. Manisha will be joining us with what's top of mind for her as far as commodities go. Stay tuned. Okay, welcome back. Let's shift focus to the commodity space. Manisha is here with what is top of mind for her. Manisha, good morning.
Morning, Prashant. Thank you for that. Well, I'm looking at cotton prices right now, where the international markets actually have seen some bit of a decline continuing there. When you look at this year, we are down by 3% in the global markets as far as cotton goes. For the Indian markets, overnight was a notification that came in from the ministry and the regulators, where government has scrapped levy on cotton imports, and this is until 30th of September. This is from 19th of August starting today. So this is basically for these 42 days only. 11% duty has been on cotton imports, which totally has been done away with. Markets clearly cheering this up, as you have yarn, fabric, apparel industry actually showing a thumbs up on this. Remember, when you look at the international markets, we are slightly not competitive competitive when it comes to exports. But the international prices have been on the lower side. And with the 11% duty done away with, it would be cheaper imports that would be coming in India. These are the kind of numbers that we anyways have been doing in sense of imports of cotton. So 23-24 was 15.2 lakh bales of imports that India saw. Last year was a record import at 39 lakh bales. This is because the international markets were trading cheaper. India has had a lower sowing, lower crop as well. And much of those imports really came in because of that. Now with the 11% duty also done away with, we are anticipating that you could be looking at higher imports, at least for the next 45 days, 42 days that is, until the time that you have this temporary import duty done away with. Interestingly, also, when you look at the India's sowing, cotton, remember, is a kharif crop. So we've seen sowing happen in the months of June and July, and the arrivals start coming in the months of October to Feb, that is. So area under cotton cultivation has seen a decline as compared to previous year. Last year was 11.04. This year is 10.69 million hectares therein. Also, what India has a target from the Commerce Ministry is exports of textile to the tune of $100 billion by 2030. Now, industry has been telling me that this is achievable only if we are competitive in the market. Now, with the kind of tariffs that we have, especially from US, which also is a stronger market for us, we stand at around 50% after 27th of August if nothing changes. In the meanwhile, you have our peers or competitors like Bangladesh and Vietnam looking at 20%, Cambodia at 19%, even China for that matter is lower at around 30%. So India really looking at means and ways of ensuring that exports do not get hit. Further cheaper imports would ensure that our profitability and India industry margins improve and the export in that sense become profitable or at least competitive with the kind of tariffs that we seem to be facing.
Okay, all right. Thanks a lot for that, Manisha. Well, let's stick with commodities then. I'm looking at Vedanta today. The street is clearly excited because they're going to be meeting on the 21st of August to consider an interim dividend. The record date for that particular dividend will be 27th of August. Remember, just in the first quarter, they had approved a dividend of close to around 7 rupees. So that's a dividend-paying machine. The street likes it. What happens when they pay dividend is the promoter's in better shape because he can repay some of the debts. That's Vedanta Resources. And for shareholders as well, they receive the dividend. So the street likes it. Also, all eyes are on the NCLT hearing. That will take a call with regard to that demerger. So both those two triggers, dividend as well as demerger moving forward. That's being tracked by the street. Stock up 2.5%. Well, time to slip into a quick break. On the other side, our special segment, It's the Economy. Lata talks to Samran Chakraborty of City India as well as Soumyakanti Ghosh of SBI. Stay with us.